Play.
In a market built for machines, where the odds feel stacked against the retail trader, one firm is turning the tide. Welcome to Pitbull Traders, the next generation in trading. This is more than just an evaluation. It's a development ground, designed to sharpen your edge, build your discipline, and back your growth with real capital. With affordable evaluations, clear rules, and a structure built to reward consistency, Pitbull Traders is here to help serious traders level up.
Hey guys, how you doing?
All right, so we're live, right?
We are live. Do we get Tom in here?
Tom will be in a minute.
Okay.
Rich is going to go first, and then Tom. Well, anyways, hey, thank you everybody for coming in. And as we evolve into the trader funding, we're going to be doing more and more live streams. And again, I believe that as traders, one of the most important things about being a trader is sharing, and we're all about sharing. And today we have two good guests. Handle Stats, Rich, how you doing?
Great. How you doing? Do you see me? Hear me? Okay.
Yeah, you sound
Okay,
good.
Great. I'm all set.
And then we got Tom, Market Profile Tom, coming in. He's going to put up 15 different charts. Excuse me. We're going to really rock this thing. But listen, we don't have a lot of time here, so Rich, I'm going to hand it over to you, and I'll be in the background if you need me.
Okay. Well, I said this. Hello and good afternoon, everybody. Welcome to what we're showing here. What do I have to do to show my page? I just want to make sure to share my screen.
Yeah, so if you click on that link on the bottom, present.
Present. I got you. Click on present and share screen.
Share your screen.
And then I will share screen, and I will tell me which. Oh, I got to pick one. Ooh, let's see which one I have. I want to share my chart. Oh, tabs. This select the tab to share. Chrome tab, window, entire screen. This screen right here. There we go. I hope everybody sees my ES chart now. I don't see it changing over here though on the trader session. Do you see my screen?
Let's see. Yep.
Pardon me? Okay,
here we go.
Is it good? Oh, there we go. Now I see it. I'm looking. Right now. This is my hourly chart, and I color code everything. So all these different colors mean different things. I have what I call a market fractal timing model, and here's just a brief synopsis of it. I look at things and I say, I ask the question, a price move only has significance when it's validated through time. So, a lot of people just look at the price level, but I think that you have to validate that price level with time. So actually what I'm doing right now is I'm looking, and I break time fractals down into, I look at 1440 minutes because that's what's the minutes in a day. And then I break it down to 480, 240, 120, 60 on down through there. And if price closes above or below one of my time fractal levels, then it validates the move. And like right now, I'm looking at a 120 time fractal to see what was going on. And we actually moved down a little bit from the highs. I really thought while we were holding on early that we were gonna go up. So right now, the way I see this, we've got to get back above 68.85 quarter to get this rally going. Rolling up to the upside again. It's on the 120. I'll look at the 240 real quick. The 240 was almost like a doji on top of the chart. Yeah, it's right here. So we're right at that level. So you can't really tell anything off this. When the market's trending though, these levels work really good for support and resistance, and especially if it's trending up, as long as it stays above those levels. Like right here, we fell back below this level. So we've got to get back above here to turn this back up. If it doesn't trade back above 68.85, then we're just stalled. And until we get an hourly close above that, it doesn't really mean anything. So this is my hourly chart. So that's what I'm going to be watching. the rest of the afternoon if we trade back above there. I also have another tool that I use. I call it my volume data bar graph, and I actually just downloaded the data for it. And I'll run that real quick, and that'll give us another indication of what the cash is doing. Let me close this down and close this. We're at 68.70. Let me look at and I'll grab this real quick, and we'll run this. This was yesterday's. So this program takes a look at the options in the SPX, and it gives an indication. And it only works in the SPX. It only works on the daily expiring options. It doesn't work on any other time series. You've just got to grab it for the current day. And let me go here and grab this. Grab this. 12/5/11/59. I just downloaded that. We'll see what this says. And so I download all the strikes and everything that's been trading in there today. And then I run it through my model. And then I have a couple other things that I run it through in this particular model. And my main max pain. I have things that I look at, and it just this model just looks at what I look at, and right now it's showing a max pain point of 68.75. So if we look at the data bar graph and go up to 68.75, let me color this real quick here. And currently we are trading at 68.69. So we're trading just below this. And looking at this graph, I can tell right now that it's highly unlikely that we'll trade above 69 today, no matter what happens. Even if we start trending, we'd have to have a really strong trend to get above there. And we're probably not going to break back down below 50. This is the point where it will probably settle. Yesterday, I think it settled like 5 points away from where the data bar graph said it was going to settle. And I'll run this thing a couple more times before the close. I usually run it, about 1 o'clock. I ran a little bit early today, but that's right now. It's saying that we're going to end up right in here someplace, and I don't think that's going to change. Actually, I can look at something here. If anything, it's closer to going up than it is to going down by looking at these levels in here, at these numbers. It's closer to going up than it is to going down right now. So we may not have much more movement today with what's going on, and it could go back down here to the settle. But I think the market's been pretty strong today. It's actually been more resilient over this week than I thought it would be. I do some monthly timing. I have monthly and quarterly timing models and weekly timing models that I look at, and I go all the way down to daily. And here's one of my here's the daily model. I put this up here right here. So I looked at, this is my event workbook. I can look at holidays, day before holidays. I look at PPI, CPI days. I have all that data in here. And then I can look at every day of the month. So like here's unemployment. I look at days before and after, and out in here, I selected, if I get out here far enough, I'm making people dizzy. I'm looking at, today is the 5th day of the month in December. So I went a little bit too far there. So I looked at what the 5th day of the month is doing. And I selected that, and then I go to daily change. And overall, the fifth day of every month is up 54% of the time and down 43% of the time when it's the 5th day of the month. And then we can look at December in particular and see what that's doing. December happens to be one of the strongest months of the year too. We know that from other studies that I've done. And the 5th day of December is up overall 70% of the time. This study goes back to 2008. So the 5th of December has been up 12 times, down 5, up 70% of the time. But when the 5th of December happens on a Friday, we can also further do that to take a look at what happens when it's on a Friday versus any other day of the week. When it's on a Friday, it's been up 85% of the time. Six times in those years it's been on a Friday, and it's been up 6 times and only down once. So it's, looking from a historical standpoint, we have a real high probability of it being up today anyway, and December is a seasonally strong month. So hence, that's why it was up 70% of the time on the 5th day of the month anyway. And this is just an add-on to like look at it. And I have like what happens the prior day, what if the prior day was up or down, how does that influence it? What happens the following day? So we look at those stats on, pretty regular basis. It's nice to drill into them. And as I say, from a seasonal standpoint, we know that November and December are the best, a couple of the best months of the year. Right here's, let me see if I can get that up. This is my monthly database, and where I look at all the months of the year. And this database actually goes back to 1970. So we can see here that, scroll out here to December. Since 1970, December's been up 41 times and down 15. That's looking at this month included in there. So it's, December's up a lot of the time, and it gains a lot of the points. I have how many points, that each month is contributed. November is actually the best month of the year for gaining points and adding points to what's going on. And then I can look at, I do this in, the room, and usually at the beginning of every month, I do studies to figure out if we've been up consecutive numbers of months, how often a single down month will happen after up months. And, it gives us an idea. And so I have some probabilities already on what's going to happen the first 2 quarters of next year. And it's, then it's dependent upon what the months do. It's because every time you get more information, it defines what's going on. And the other one I look at, so I look at a lot of things. I have the ability to look at a lot of things. And this model here, actually, I've been running this model for about 2.5 years now, and it's remarkably accurate about direction. It gives me an idea about, how far it can go up and down. I've only been really surprised once, big time, in that 2.5 years, and that was earlier this year when Trump first started talking about tariffs. I had a probability that it could go down, although it wasn't a very strong probability, and it certainly wasn't as much as it did go down. But I stuck with the model that said everything was going to come back. We're going to make new highs this year, and I still think we're going to make a new high before December. I've been saying that for the last month and a half, although it's been a little difficult. Anyway, that's some of the stuff that I do here. I look at also standard deviation levels, because there's so much option trading these days. You have to know what the standard deviation of every instrument you trade in is on any given day, because the market quite often, turns at that point. And the reason it does is because, especially one standard deviation levels, because these big trading firms with lots of traders have, people that manage the overall position. And when it gets to a 1 standard deviation move, they are always going to make positive or negative gamma scalps. They're going to readjust their position. So quite often the market will, reject, when it gets to a 1 standard deviation level, because that in the empirical model, it's 68.5% of the time. So they have to adjust there for sure. And you can see today we almost got up to the 1 SD level. There's another thing in here that is kind of interesting, and which I talk about with the people in my room, that I can see here. And anyway, we'll take a quick look at the NASDAQ right now. As I say, we're pulling back. My volume data bar graph says that the cash is going to end up around 68.75 right now. We're trading 10 points below. So I think if this market drops a little bit, probably going to be an opportunity to buy and, get long again, because I think it will drift back up. It would be nice if it went all the way down to the settlement, but I don't know if that's going to happen. Might. The NASDAQ, I haven't updated. The NASDAQ, same story here. It got almost up to the 1SD level. It actually hit another level. This is a special level that I have that I'm working with. And it's got a projection of price where I think the market's going. And I think this market's going substantially higher in the very near future. And I'm actually looking for a real volatile up move the last 2 weeks of the month. So I can throw that out there. We'll see if we'll see if I'm going to be right. I think my model kind of says it will be, and I will be doing a lot of work to figure out what next year is going to be, because there's a lot of interesting things taking place in the market with the way it's traded this year and the length of time we've been going up and how much we've gone up. I have two very different probabilities shaping up, and I don't know which one I'm going to go with yet, but I will. As time rolls by, the model will update itself, and I'll have a better idea about what to plan on for the future. Danny, can you talk in here, Danny? I don't hear you at all. I don't know if.
Okay, there we go. I'm sorry.
There you go.
Excuse me. I think we had a little bit of a glitch here, but anyways.
Oh, did they not hear me?
No. Everybody's hearing you, but we've just been working behind the curtain.
Oh, okay.
So I've got a couple questions for you.
Shoot.
We come together on some of these queries, and we've been looking at those, how the Friday Monday thing has been working, and then we were talking about a week ago about your study for what you thought for 2026. Did you bring that in today or no?
I actually have it, but I didn't go over it enough, and I don't want to show it if I'm not familiar, and I have to update a couple things. I just put the December in what's currently happened in December into my monthly, and we can kind of look at that and maybe get a little idea. I like to start from the quarterly study and work backwards.
Yeah.
But right now, this is what we know about this year so far. Every month since April has been up, and so there's been a 7-month streak of up months. And currently, I can go. Let me just slide out here and grab this one thing here. So currently, we know that cumulatively, we're way up on the year right now. I mean, that's. I want to filter this by color here. So cumulatively, being up in December, I mean that's happened a lot of times. This goes back 56 years. So that's happened 38 times, or excuse me, let me go here. December, we are right here, 41. Yeah, when December's been cumulatively up, 38 of those years have been up years, and only 3 have been down years. And I obviously something weird happened to make them be down years. And here, just barely down 1.45%, 0.73, and then this was that 2018. I think that was Fed rate hike stuff, and that was kind of a weird year. But the rest of the time, I mean, normally when you're cumulatively up by December, it's obviously, as I say, it's very rare that you're down, and I mean that. It's very rare to get a down year when that's happened. Anyway, I would to get further out here, Danny. I'll just have to I'll have to look at my quarterly study to look at the consecutive quarters up, and where those quarters fall. Right now, let's see if I put this. I can put this in here, and maybe see something, but it's going to be a little difficult. Let's see if December ends up being up though. Let me just go here and clear this out. Clear this. And I think November was just barely up, but it was still up, and that makes a difference. So let's go look at this one. November and December are up. What happens in January following? So 26 times November and December have both been up. In this case, we had September and October up too. So, and with September being up is very unusual, very unusual. So I think I should go back and add those in and see if we get back to doing anything. You know, I usually like to run these queries, you know, and try to figure something out before I show them, because then I have a better idea about what's going on. But these, when those 4 months are up, because September is the worst month of the year overall. Over the last 50 years, September's lost like over 1,000 points, and this year actually kind of changed it. It's still a loser, but it certainly helped a lot. Let's see.
Well, Rich, why don't we do this?
Here, September, October, and November in 56 years those 4 months combined have only been up 8 times in 56 years, where September, October, November, and December were all up months. It's only happened 8 times in 56 years. That's not very often. I'd say that's pretty rare, because it's.
And what does that say for January?
Well, let's see. I have to go here when that's up. I got to go here.
I think it's going to be up. You know.
Well, usually when October or when November and December are up, January is almost always up. Here's what it's showing right here. When those 4 months are up, this has been the following years here. They've been up. The first quarter has been up. When you get to the second quarter, that's when things start getting dicey. So April, May, and June, even on my quarterly study, but it looks like the first quarter should be pretty strong, according to this right now. The second quarter could be dicey, and I know I did a quarterly study, and if that second quarter turns out to be down, let's just make June. Let's just make this a down, and I'll do it in June. Actually, I should do. I can't do that here. I have to do this in the quarterly study, but I can do this right here. Filter this. If the second quarter is down, there's more than likely it's a very strong probability that the third quarter could be down. So if the first quarter looks strong, but as I say, it depends on how it develops through here. As we get some development through there, the prediction about the second quarter will be more accurate, and the prediction about the third quarter will be more accurate. But right now, the first quarter looks really good because it's always been up for that first quarter when we had that pattern of those last 4 months of the year being up. So it happened 8 times, and of those 8 times, the first 3 months have always been up.
Good. That's what
then it gets dicey. So, and I will run this again, and so it's going to be very dependent on, a strong December, but I'll have some estimates. I have a thing that I look at to gauge how much it moved and what volatility levels we were at, and I can develop some monthly and quarterly standard deviation levels, so we'll have expectations of price range. And Danny, I've been showing you this for a couple of years, and
Yep.
and I told them, I don't know if you heard me say this, for 2.5 years this model has been outstandingly correct. The only thing that I can say that I really missed was that Trump tariff thing. I did not see that. I mean, down is always a possibility, but down as much as it was completely off my radar. But I stuck with it on the lows, and I said the market's coming back because my model was so strong for this year. And obviously it came back, and then September was a complete surprise because it's so rare for September to be strong, and we had the largest point gain ever in December. Now, it wasn't the largest percentage gain, but it was the largest point gain ever in September this year, and that really gave me a real impetus. When that happened, the rest of the year is positive, like every time. Especially when September gained as much as it gained. Let's see, and this is, and I put in that first quarter, the second quarter down routine, so that changed what I'm looking at here. But let's go here and clear. Oh, I got to go here, back here. This should be 125. It should be. I put the wrong date in there when I carried that down. Anyway, we gained 228 points in September. That was a lot of points. Never gained anything anywhere near that. There's the best months of September, and that was pretty astonishing. The other thing that I do, and we can look at one other thing real quickly, as just this is just an outlier kind of thing that I look at, and I look at the political, pre-election years, presidential election years, post-presidential election years, post-election years, midterm. Currently, let's see. So next year will be a midterm, correct? I think that's what I'm looking at. Post-election, that's this year. So let's take a look and see how those have been running. Midterm years, there you go. And now we'll go back here and look at the gains and losses in midterms right here. So midterm years, there's been 14 of them since where there weren't presidential elections. So we're looking at just strictly congressional, and the Senate seats that are up. There's been 14 of those. 8 of those years have been up. 6 of those years have been down. And next year is a midterm year. So which one is it going to follow? And when you drill down through here, that's when you can go here and, then you can look and see that, we had negative Januaries in a lot of those years. That's what this is. And, it's a lot of negative Februaries. And if the year was good, it looks like, November and December is what salvaged everything in those years. But if the first the first part of the year is up, it always makes it more likely that the rest of the year will be higher.
Yep. Well, Rich, let's do this. I want to ask you something. What do you think is going to happen today in the latter half of the day? Do you think we're
well?
Going
I ran my VDB already. My VDB said that the cash was looking for a settlement price in. Let me go here to this. Yes, I think 68.75. Let's see, I had that right here. It's initially indicating 68.75 as the cash settlement price, and I said if they got down, when we first started, I said if they go down a little bit more, it's probably going to be a buy. And let's see what time this is. I did that just literally a few minutes ago when we first started. So I ran that study. Now it's 12:30, so there's I said it sometime in here. It hit that. It's rallied up. I think it's gonna. It looks like it's gonna stay around 75. It may this may move up to 80, and unless it can get above this 68.85, I don't think. I mean, it's not gonna. It's very unlikely to get up to above 9 even. And this is SPX. This is the cash. This is not the futures. So just make sure you know that.
Right.
I think you can rally up in here. If it rallied up in here, I'd probably I'll run another VDB to see if that's changing. As I say, it just dipped down to. Let me go here and grab this real quick. Take this off and put this on here.
You know what? When I mean, we're both bulls out of our minds, but here's the problem. I think.
Yeah.
We've gone up so much, and you're on a Friday, and I think we're going up, but I think that there's a possibility they could walk away from this stuff late in the day. That's what they're good at. So.
Well, yeah, they are, and I'm bullish too. I get overly bullish, a lot, but it's because markets tend to, have a tendency to go up. But my weekly model, which I just built earlier this year, actually said the first 2 weeks of December were going to be pretty iffy, really, really difficult to get it going up. But so far, I mean, this is held in really well. And actually, if I go to this other chart, I was looking at this earlier in the week. This is my 480-minute chart. You can see the last week and a half. I mean, we've really been solidly up in this area. It really rejected this low. It took out that was the rare earth metals statements by Trump right there. I should label this. And here's where we went back down. I can't remember what that was down for. And then once again, we just shot back out of there like a rocket. And that has been consistently the pattern all year. No matter what happens, it goes down and it just really comes back. This was one of the deeper moves we had this year, but I'm still looking for this month to make a new all-time high and to really potentially rip a lot higher than people can anticipate. And obviously we'll see that. But looking at this chart, as I say, it's held this area really well. And it's the end of the year, and seasonally it's bullish. And I know people can do a walk away, but I have a tendency to believe that it's holding here, and if it holds here, even if it goes down just a little bit, and I don't see it going down like dramatically, but if it holds here over the next couple of weeks, once the expiration is over, this triple witch expiration, it could be a really violent move to the up, especially if we're holding really well in here. And the other thing is that a lot of stocks haven't participated, in what's happened. I mean, you get the mega cap stocks. I mean, they're 60% of the NASDAQ market. They're like 35-40% of the S&P 500 right now, just 6 or 7 stocks.
Yeah.
So if you're in the right stocks, you've got a really good potential of going up. And I think I know there's been a lot of talk about AI and that it's overblown and overdone. And I just don't, I say, if anything, it's really just getting started. I'm using it more. The people that I know are using it more, and it is getting better. I've been using it for like a year and a half to just barely testing around in it, and I just think that there's so much potential there, and it's potentially could add so much productivity to the economy. It's just, I think it's going to spur growth, and I just don't think it's any. I don't think we even realize how big AI really is and what it can really do. I mean, it's.
Well, one of the things that I always try to make a comparison to it when the markets were going down was, the tech bubble. And to me, that decline didn't look like anything like the tech bubble. And, there's too much investment in this area for the markets to go down. And the difference between the tech bubble, and I've talked about this before, is that, as you were on the floor back then, and you had all these. It was, remember, like, I don't know. Let me start this over. During the summer of the tech bubble, and I've talked about this before, there was like a lot of college kids that were coming into, doing that day trading stuff in the Merc, the tech stock day trading. Remember that?
Oh, right. Yeah, definitely.
That was like the hottest thing going.
Yeah.
But the problem with that was, yes, that the NASDAQ went up and up and up and up and up every day, right? But the problem was that when the markets actually did start to reverse, a lot of those stocks had very little. They didn't have any balance sheet. I mean,
right.
Literally. I mean, we were for the people that were not there back then. Literally, and I've talked about this before. There were companies that they were being called tech companies, and they weren't even tech companies. They're like these little things in a guy's garage or something in Toledo or whatever
with the .com name.
Yeah, right. And the thing is that before that, it was really funny, and at least I thought it was. Here you got all these burly guys getting in the elevators at the Merc, right? And you got all these young guys walking in, wearing sandals and puka beads, and they're all, they're all shooting their mouth off, and in the Merc Club, and I mean, I know that there were guys from the floor that were in the Merc, that were in the Merc Club, that were like, these guys were saying, "Oh yeah, I made 180 grand today on this stock." I made, and this went on for weeks, right?
Yep.
Then all of a sudden, boom, it was just gone. And one of the things that I always said during that summer, and the desk was very busy on the floor during that time, I always said that what would happen is that all these young guys that were piling into this stuff, it was like, that when it ended, you would never really see them again. And I don't know of any guys that I remember back that were doing that back then, the day trading stuff, that the day trading rooms, right? Ojo and Manini had one. They were all over the United States. They just became super popular. But all of a sudden, it was just, as soon as the market started going down, it's that same old thing that it's very easy to buy these things, right?
Right.
Nobody knows how to sell them when they start going down like that. And I remember a friend of mine was telling me about, hey, yeah, I got this buddy of mine. He's made about $500,000 doing this and da da da. And I remember telling him, I said, yeah. I said, talk to me about this one, after the market corrects, and then we'll see who's left. But that was a whole different animal. I don't think it even.
Yeah, I'm thinking back, and I remember when those guys, they'd come in, and those stocks would open for trading at like $5 and be trading 50 within an hour.
Yeah. Or even worse, they buy them at 20 and they'd be 180.
Yeah. I was like, shit.
In the same day.
Yeah, the same day.
And
it happened multiple times.
Bad.
But this time, this technology, this time it really is different, because these are companies with
mega balance sheets.
And real products, real builds, and or they're trying. They have some infrastructure, and they're doing something real. So I differentiate it like that. Now, are all of them going to survive? Absolutely not.
Right.
But we don't know what that's going to be now, and it really is. And I think I remember earlier this year when we started going down, and Larry Ellison from Oracle said, hey, this tech bubble, I mean, this infrastructure it's not slowing down. And he literally, by commenting like that, brought the market back. But he was right. I mean, look at NVIDIA has margins of like over 70%. I mean, there's obviously big demand. I mean, I saw a headline today that they have so much cash they don't know what to do with their cash.
That's what you call a high class problem. But
Yeah,
anyways, let's jump over to your favorite tech stock.
Yeah. I've been touting Intel for the longest time.
Can
I got a
you
lot of people
pull
in
up the
Intel.
chart?
I'm pulling up a chart right now. I just want to, I want to get this down here. I've traded Intel for a couple of years now and been up and down and, watched it and talked to people that knew, talked to people that worked there. And I started amassing a decent sized position in the low 20s, and I don't want to tell you it's a nice position, and I'm going to stick with it for a while. But I actually looked at I was looking at here was that yesterday, that big down move, and I don't know what pressured it into it, but I looked at my time fractals, and the lowest my time fractal said if it got back above 41.16, the next level was this 41.55 and then 42.62. And I've drawn some more fractals on there today. If it can get back above this 42.62 and close on an hourly basis, and it traded up there today, but it failed. And that's part of my time fractal theory. It's got to close above that level, and I have certain parameters for every one of these levels, but it's got to close above there on an hourly basis. If it closes above there on an hourly basis, today, I mean, it would be exceedingly bullish. It's bullish anyway because it regained these couple of levels in here, but above here would be like exceedingly bullish. And I'm actually I based on this, I think I have this on here. I might be on. I have it on a different chart. Hold on, I go show you this chart here. Where is this? Let's see.
Well, while you're looking, I want to explain a little bit about what I believe is a predominant price action in the S&P, and it's called back and fill. And I know that a lot of people, everybody already knows what that is. But once the S&P started going up after that low, what was it, 65.25 low, and started going back up, you could see that could see the shorts getting squeezed out, right? But that wasn't the half of it. The half of it is that as the market started going up, and we got up to these most recent highs, especially this week, we were caught in this like chop, like. It wouldn't go under 6,800. You couldn't get it above 6,840, 60, and I believe that that's the type of price action that as a trader that you can kind of lean on that. And I always do, you know what I mean? For me, that is the best way to follow or to map the S&P. When those patterns start showing up, there's really no selling attached to it at all. The only selling that I think goes into that is when the S&P goes down a little bit, people, the retail, get short into that. And I never want to get short into that.
Well, I can't, let's see, maybe I have it here. I can't find that chart that I want. I keep so many charts. Let's see here. Maybe is this it? Let me look in here, see if this is it. No. I might have it on a different page. The chart that I'm thinking about, I actually have a projection on one of my other charts for this to go to like $64 and basically pretty quick. Let's see, is it here? No, I remember where the projection is to. As I say, I can't find the chart, but I have this. If this thing gets trades and closes up here, especially today, this stock's going to 64 and pretty quickly. I really believe that. As I say, I can't find the chart right now, but
that's all right. We got time.
I have my number, and it's and there's a lot of reasons. I mean, Intel has a lot of they've got a lot of technology. They're like practically the original chip company. I mean, they didn't invent it, but they certainly started, producing it. And although they missed part of the ball, they do a lot of things that people are not aware of, and they have two new fabrication processes that assumedly are better than Taiwan Semi's processes. So they're going to get in the foundry business, and this country's going to be onshore more of their chip manufacturing. I mean, 90% of the chips in this country are built outside of this country. That is that's a real problem. You can't be dependent on a supply chain because you use chips in everything. You can't be dependent on a foreign supply chain for technology, and especially cutting edge technology. It has to be built here. I don't care who builds it. I mean, I think Intel is going to do a good chunk of that, but it really, for security purposes, it has to be done here. I mean, we can't let 90% of our chips be coming in from the rest of the world. We can't be dependent on that. We saw during COVID when the supply chain got destroyed. I don't think it's ever really recovered. Do you?
No.
And I mean, and chips are everything. And the demand for chips is only going up. So I think we're going to, and now, like Google's, Google, Apple, they design their own chips. Microsoft, they design their own chips. So they don't want to necessarily get into the production business. So somebody's going to be in the foundry business to produce those chips that they want. And I think Intel is the company to do it. And the current CEO, he was on the board originally and he quit because they weren't doing things right. And that's Lip Bhutan. And besides the fact that he's literally a rocket scientist and a genius, I think he's done everything absolutely correct. And I think over time that it's going to be proven that his plan and what he's doing is correct. The stock, assumedly, one of the guys in my room, a really bright guy, looked it up, and yesterday the stock got hammered a little bit because Intel does not take credit for deals. They don't announce that they've done a deal. They say they're going to let the people they do the deals with say that they've done a deal with Intel. They aren't going to be shouting out off the rooftops like their competitors do that they're doing deals. And but they are doing deals, and I think that and over time, it will come out, but they're just not going to announce them or make make a lot of big news about it. And I think that the stock has already had a fire lit under it. And I think over time, and it's going to be a very short period of time, that I think the stock could easily double next year from 40 to 80. And I think it's going to go a lot higher because it's the right company with the right technology. And now it's got great leadership. And I'm looking for it to do really well. And as I say, I've damn near doubled. I mean, I'm long. My average price on my longs right now is 21.35.
What was your best day in Intel recently? How much did you make?
Well, I don't. It would depend. It would depend on how much it went up in any one of those days.
What was your high when Intel made its high? How much were you up that day?
In Intel?
Yeah.
On my position, the most recent position?
Yeah.
150 grand at least.
Beautiful.
I mean, yeah. I mean, it was a lot. Well,
excuse me.
But I got a couple other stocks that were dogging me down too, but not nowhere near that. I mean, because when the AI stocks took a little hammer, I got a few different AI stocks on, and I might have been down 10 or 15 and a couple of other ones, a piece. So it's like you can't be up in everything all the time. And yesterday when Intel got hammered, every other stock I had was up. So
it's called rotation. But anyways, here I want to dig into a little bit of Tom's on the eve here, so we're going to bring him in a minute or two. But I want to dig into a little bit about where you're at with the algo, the coding. What are you doing?
Well, as I said, I've been. Let me start the story to tell you what my real background is. I was a trader on the floor with Danny. I mean, Danny and I have known each other for over 30 years. I mean, it's a long time. And I moved out here to Colorado, and I was day trading, doing all this stuff. And about 6 years ago, I had been an option trader in Chicago. And the guy who programmed our option sheets, we used to use sheets in the pit for option valuation. And I called him and I said, "Hey, Dave, I want to do some quantitative analysis." He goes, "Rich, that's great. You're the right guy to ask the right questions, but I don't have time," because he knew I was going to ask him to do the coding. And he goes, "You can't afford to hire it done." No. Because you'll hire somebody, they'll come in, work for a couple of weeks, build you what you think you want, and come back with an $8,000 or $10,000 bill, and you'll say, "But that's not what I wanted." And he said, you got to do it yourself. Yeah. So I knew a little bit of Excel. I got online, took a couple, some classes, and then, but most of it's learning by yourself. So I've been doing it for 5 years now, a little over 5 years, 5.5 years. And I think in those 5.5 years, I've probably programmed 18,000 hours. I mean, first of all, I like doing it.
I think it's more, but.
Well, and I actually have like programmed algos. Let's say I can show you. These are like a couple of live algos I show in my room. Now I don't give stops or targets on these, but these just give buy or sell signals at specific times during the day. Like this gave a buy signal at 9:55 this morning in the NASDAQ of 25,795. So at 25,795. So let's go look at this just to kind of figure this out. 9:55. 9:30, 9:50. Right here. Right here. At this close, when the market closed right there at 25,795, right here, this gave a buy signal. I mean, it took some heat, but it went up here, and usually I don't know what caused this down move. I'm sure I haven't been following the market that closely for the last couple hours, but that's just, and I'm improving on these algos, and I have several that I'm working on, to give live trading signals. Like I do a morning gap algo to, gives probabilities. I'm filling the morning gap, but I have several others that I'm working on. But I come to these epiphanies about my programming, and I either want to change what I'm looking at or change the coding of the programming. And I'm getting to be a better coder.
Yeah.
But I had some.
I remember back about 6 months ago when I was pushing you to start using AI.
Yeah, and AI has definitely helped. It's enabled me. You still have to know what you want. Like a lot of people, I've had people tell me, "Oh, AI is going to replace you." Well, not hardly, because you still have to know kind of what you want, and AI still gives a lot of wrong answers. But when you know what you want, and and you can direct AI for what you want. It can code things. I can do coding in like an hour that would have taken me 2 days to do before.
Yeah.
That's it. That's what I'm talking about, productivity enhancements. And that's why I think that AI is just getting started, because I'm just one guy and I'm doing things that I could never do without it.
Yeah.
In the time I could do it in. And that kind of productivity enhancement is going to make the whole world more productive. It's just like when the internet first came out, it made everybody more productive. Purchasing managers could compare prices, across a wide area real easily, right?
Yeah.
Yep. I mean, it brings productivity up. Same thing here, but in different ways. Depending upon who you are, what you're doing. I mean, there's just so much that it can contribute to what's going on. And, people are worried that it's going to be a job destroyer. No, it's a job creator. Right. I mean, short term, there might be some dislocation. And if you're dislocated, it's painful to you. But long term, it's definitely going to be a lot more productive. And the other thing, the one thing that I really look at, and I really, really believe this, and that is that there's, like 8 billion people in the world. There's only, out of that 8 billion, maybe, 2.5 billion that live like, more modern, and they're spread throughout the world, but there's still like 5 billion people that want to join the game. Yeah. And the best way to join that game is through education. And I think that AI is a kindergarten teacher and a college professor at your fingertips 24/7.
Yep.
I know it's going to be hard to, there's a few steps to get it, to everybody, but it will be rather rapid. But when we educate people, they become more productive. They have better standards of living. They have better health. And that is all going to happen. And there's just a small percentage of the couple of billion people that have access to it now that are using it. That's a small percentage of that 2 billion or 2.5 billion, whatever it is. And you have 5 billion more that want to join. And the first segment is barely even there yet. So there is an opportunity for growth that's, I think it's mind-boggling about how big that opportunity is. I don't think we can really understand, so I see that growth as so big that if you think we're in a bubble right now, you are beyond wrong. I don't think that could be satiated in 15 or 20 years. I just don't think it. I don't think it could be. So, and for sure not the next 4 or 5. I mean, the infrastructure that will take to get this to everybody in the world is just it's beyond. It's almost beyond conception. And we know that energy is the biggest one of the biggest problems right now.
Right. Well, listen, real quick. We got Tom and Eve right here. Let's finish this by me asking you one question. What would you tell traders out there that you think that they should be doing, or what are the things that you hold that traders should be thinking about?
Well, first of all, we know as traders, you always have to learn. You can never stop learning. You and I have been traders for, 40 years. I
Yep.
mean, I'm always studying or revisiting old things. And so you can never stop learning. And I mean, I'm basically a technician too. So I pay attention to charts, and that's why I have my time fractal theory. And, I have a lot of things that I work on, but you can never stop learning. And I've paid absurd amounts of money to go to some courses, for trading techniques and different things that, some of them were worth it. Some of them weren't worth it. A lot of them were overpriced, but you still walked away with something. But you always have to keep continuing to educate yourself. And I know you're trying to put together, something with market profile and, my stuff and other things. And there's a lot you can learn here. I mean, we've been around for 40 years. I mean, between you and I mean, and a few other people, you got a couple hundred years of experience here.
Well,
I mean,
Tom's right below you. He's been around for a while too. But listen, we gotta pull you out of here because Tom's waiting in the eaves. I want to thank you for coming in, and I think you're right. Traders need to always keep an open mind about learning. There's always going to be something new that people can learn. But anyways, thanks for coming in today, and I'll give you a call in a little while.
Okay, thank you.
Okay, thank you. Okay, Tom, you in here?
I'm there.
right.
I don't know how's the voice.
Now, Rich, you're going to sign off, right?
I guess let's see. I guess I'll go right here and
We like you. We just don't like you that much. I think you just shut it down, Rich. Okay, thanks.
All right, there we go.
Thomas,
How are you, buddy?
what's going on?
No, just enjoying Rich. You guys, nice presentation.
Yeah, he's really good. Sometimes he goes off a little far, but anyways, and Marlon and I talk about that all the time. I can't even remember what Marlon said the other day, but anyways, Tom, can you tell people a little bit about yourself? Where did you start in the business? What do you do? What do you do? What do you like to do as far as your trading? Can you talk a little bit about that?
Yeah, real briefly. I'm not to bog everybody down, but I started working at Lehman Brothers in October 9th, 1987, which was the week before the crash of 1987.
Wow.
It was great. It was actually probably perfect timing. I had no skin in the game, but I got to watch, and I was hired as a broker in Houston. So I kind of, the old days of the squawk boxes, and I had the opportunity to really watch. Didn't have any clients, so I watched the interaction, and it kind of gave me. I remember leaving and saying that no one knew what was going on. It was one of those, and I said, and kind of to dovetail into what Rich was just saying is we've got to. I've decided to learn. I said, I just wasn't going to be a broker. I wanted to learn the market.
Well, was that before? Did you take the market profile class before or after?
No. And what happened is I said, I'm going to learn. And I started to learn about technical analysis. And I kind of stumbled onto market profile in about a year later. So I had been involved with market profile. I met Pete and I spent a week with Pete in California. It was a fall of 1989. He's got a family place up in the Sierra Mountains, and it was 20. They were almost all CME guys.
Well, for those people that a lot of people don't even know who Peter Stottlemyre is.
Yeah, you probably know more about him than I did at the time.
He was a grain trader. He was a grain trader on the Chicago Board of Trade when I started in the business as a runner. Mm-hmm.
I know he moved to the missiles, but he's, what was interesting to me is it was just totally different. everybody from technical analysis, there was always a derivative of that. But when I kind of went to his class, and because his was so different, his charts were so different. They told more, a bar chart, a candlestick chart, they tell you open, high, low, and close, right?
Yep.
His told how much time is spent at a price. So it creates value. It gives you more information, or how little time, or volume profile, exactly how much volume was put in at a time, or how little volume was put in at a certain
time equals value.
Absolutely. And that's very critical information. And what kind of tied into all that is, as I was learning the business, I was taught a story, a kind of a mentor to me, a very, very common sense guy, very, very profitable guy, very, really intelligent, always the smartest guy in the room. And I believe I told you this story, but he one day just told me, he asked me a question. He goes, what makes a stock move up or down? And he goes, don't answer me now. He goes, let's talk tomorrow. And, and I kind of got my yellow pad of paper out that night. I was going to impress this guy.
Yeah.
I was in my mid-20s. I was a kid. I didn't know, I had 40 different things, and, God, I'm going to impress him. I got to probably around number 4 or 5 the next day on what's going on. And he started yelling at me. He goes, use common sense. He goes, there's only one thing that makes a stock move up or down. He goes, it's supply and demand. And that tied, it just really concreted to me market profile, because that's what market profile does. It allows you to see where value is, where all this information comes from, how little time is spent and what that tells you, and where the value is, where supply is located and where demand is located. Yeah. And the more you break that down, and now technology has allowed us to make it more than, as Pete said, it was just an intraday way of trading. Now you could expand that and make it multiple days. And personality wise, I'm more of a swing trader. And now I tied that right into it. And it's just been great for me. Yeah. Life changer.
Well, I've been watching you, and you've got great stuff. And one of the things that I appreciate from you since we met, I was talking about being a scalper or trying to make money in the day trading and stuff. And you said, Danny, I'm a swing trader. That's what I do. And to tell you the truth, I believe that philosophy, that trading philosophy, is better than trying to knock this thing around, buying and selling all day long. You find a better level, you wait, be more patient, and then you enter. You don't just banging around like I do. I'm trying to get away from that. But anyways, so we got a lot of charts to look at. And,
we could break something down a little bit different than what you guys were talking about with Rich. But I want to take a little bit longer term look at things. And I just wanted to kind of illustrate where I'm starting to see where supply and demand is in several different markets.
Right.
And, you pull away from it. I'm kind of one thing that we didn't talk, I kind of do a top down analysis. I look at the market, the S&Ps, the longer term, and commodities. But I'll look at them, the S&Ps, and try to find where supply and demand is located. I'll break that down into different sectors. I go through all different sectors and say, okay, this is, also in supply and demand, and then find stocks within that.
Right.
But, just to get into this, talking about, start off with looking at, I think we looked at gold. With gold, could you see my charts at all?
No, you haven't put them up yet.
How do we do that?
I think Manny can help you with that.
Okay.
Manny, you around? Hold on one second. No, I don't know. I haven't posted any charts in here, but there's got, don't see a way to do that, Tom?
Slides, share screen. Let's see.
You just click present and
Yeah,
share your screen.
It's showing. Chrome, Windows. Here we go.
Click the plus and the
How's that?
Present invite box.
Okay, so that's okay. That's what it's going to do.
Yeah.
Okay,
So
you know what I'm going to do? Watch this. All right, I got this.
Good.
And make this a daily. Okay.
So right now we're going to do a spread of charts, right?
Yeah, hold on. Let me just fix this one real quick.
All right.
It gives me a little, makes this a little bit more flexible for me.
And Tom, you yourself, you're an equity options trader, though, right?
Yeah, I do. And again, dovetailing on what you guys were talking about as traders and one big successful is one of the things you got to do is make it suitable to your personality.
Yeah,
and,
absolutely.
And with, for me, I like keeping things simple. I use, because, and it fits very good with my strategy of supply and demand, is I'm directional. I don't use a lot of multi-leg option strategies. I do, but the majority of the time I'll just, buy a single leg put or option, or primarily buy, but I will also sell depending on how much volatility is in the market. But I'm just looking at it directionally. But anyway, let's start off by taking a look at the gold. That was the first chart I wanted to take a look at.
Yeah.
Is with
that's a gold daily. That's a gold daily, right?
This is exactly. This is a gold daily. And one of the things is we've had, we had a huge run up. And for all intents and purposes, when I look at this, I don't want to make this more educational, but I want to show you what we're looking at is you kind of take a look at one of the things Pete talked about is his distributions. Markets fall into natural distributions. That's what he found when he started setting up this. And I see a lot of people using market profile or volume profile, and they're not using it correctly. One of the things you have to do is you have to break markets down into their natural distributions. One of the things I did is I just put, let's take this off first, is you're kind of sideways. Obviously we've had a strong up move, and I'm just going to do this for purpose. And we've had a long distribution, a directional distribution. You could see it because it's very choppy and very long. But getting into this, one of the things you want to take a look at is this kind of gives you context of what the market's trying to do. We're kind of sideways, and you could tell because this distribution is much fatter. So what that does to me is when we're taking a look at this, and what makes the advantage for traders is it gives you, we're sideways. When we're kind of in a balanced area, you kind of break these down and you find areas of balance. So what you could do in here, this balance area, what's funny is I'm going to start showing you different examples of this. This area here, let me see. I'll make this. This becomes an area of this balance area became an area of supply or demand, excuse me. So as we're in demand here, you can see as it pulls back, the people or the area of demand defended their prices. And this is what I wanted to show. This is what I have today. Show how many times this happens. It's a recurring event. And they developed this area and the prices shot up. Now we've got an area that we're pretty much testing here is resistance. Balance in here. They're still supporting these prices. If we get a break, we're going to obviously test higher. If not, we're going to go back down into this area. And this is what I want to show you with gold is gold has been kind of sideways, but it's giving you some nice directional here because obviously it's in this area here has run up against resistance. Market, it's pulled back, but prices seem to be supported in here. And I'm kind of looking for maybe another test of the 44.37 or the all-time high in this area.
Yeah.
So again, these areas here and here, just for illustration purposes, oops. These balance areas, and it actually ended up into be areas of demand.
Right.
I'm starting with the commodities and just showing some illustration of what silver has been an animal lately. And it's probably tied to the AI, but we've had a huge, I mean, from the lows in April, what's that? 103% return. I mean, that is a very, very strong run. When I look at these, I look at, again, this area of balance. Well, you could probably break this down. This area of support, one again, retested and shot out of there. Now we're up here. I think if we get any kind of pullback, silver may have another leg higher. And that's what I'm thinking with that is I think we've got another opportunity for some more strength. But we want to see, this is an area of, right now has become an area of balance. So there's a lot of liquidity in here. Traders are feeling comfortable. And let's see where the next leg brings us. But again, if we get any kind of breakdown, I'm going to wait for buyers to come back in before I push higher. Crude's been very tight lately. You could go back, and this has just been somewhat of a sideways market. It's just been a scalping market recently. But what this tells me is you've got a very strong, and this goes back to June, early June this year, we've been sideways. We've got a very mature bell curve. That kind of tells you the longer this is, a more mature bell curve, we're going to get an explosion out of here. I think we're going to have a very strong leg, either higher or lower. No one knows at this point because we're just playing in balance. But for the traders out there, you've got areas of balance that they're showing supply in here, and you've got an area that's kind of, whoops, excuse me, in here that's bracketing the market. This is an area of demand, of supply, and this is an area of demand. So we're kind of chopping between the, roughly the 62 to 57, 58 area. So it's, again, we're just chopping back and forth. And even if you're a day trader, you take this as for context. When you're kind of down in this area, you're probably looking more to go long. And even though, again, as a day trader, take advantage of these. You got to look at the context of the market. It definitely will help you in your day trading. If you can find out what the personality is, if we're kind of choppy, it's a revert to the mean or an RTM kind of market, and take advantage of that. I want to take a treasuries. There's another area we've had some really good trades. Personally, I've taken some really nice trades. We had an area up in here, an area of supply, and it was a very nice break. And this is what we're trying to find. As traders, Danny, probably much better than I do, is if you could find the personality of the market, it helps you a lot as far as what type of market or personality the market's taken. If extending this area of supply over the other couple, earlier last week, just before Thanksgiving, it gives you an area of resistance. You watch that. And as it broke hard and went right back into the area of demand. Now, if this area holds, we could just go back and forth, which it kind of seems like it is. And, we're going back, and I think 2 weeks from now, we've got the FOMC meeting. I think the odds are, according to Polymarkets, high 80s. Last I looked yesterday, day before, it was roughly 88% chance of a quarter point lowering. It doesn't mean anything to the long-term treasuries. If I could switch real quick, I kind of made a little bit of a chart, and this has been the easing cycle from September of 24. They covered in September, they lowered. This is I should start. This is a 10-year. This is the yield on the 10-year. We've cut 50 there, 25 in November, 25 in December of 24, 25 in September of this year, and another 25 in October. So we've 150 basis points. They've cut interest rates. Yet the 10-year is higher than when we started. So the adage, the Fed controls the short end, the market controls the long end. And the bond market's saying right now, we're directionless. We're kind of going sideways. They're not making a huge bet one way or another. So I just wanted to point that out, even though, let me get back to here, is with we're kind of choppy looking at the longer term. So I'm kind of expecting another possible run higher. I think that yields, the price on bonds are probably going to go back higher, pushing interest rates a little bit lower. With that, taking a look at the S&P 500, and this is where everybody is. I look at the SPY a lot because I do the options, but even though we've hit pretty much try to break out today, we look at and understand this chart. This is the yellow. These are balance. These are profiles per day, per session profiles. And what's interesting about today, and I brought this up several times. I think I brought a chart up in your trading room, Danny, and Mr. Top Step, is we've got areas of balance. This area here ended up being an area of supply. This area validated it. We had an area of supply. We had a balanced area. Prices broke down, which means supply took control. Pushed prices up. It ran back in November, ran back up into this area and didn't have enough to push it higher. Prices pulled back down. Now we had another balance area, and look at the value areas. And this is kind of what I look at is when you find areas of value overlapping like that, or what we call balance areas, it kind of ran back up. If I could extend this area, once prices hit here, we're still, again, here's the balance area, pushed it down. We came in here and we really didn't push one way or another until today. Now, what's important is for the day traders watching this is if prices really break down into yesterday's range, they're rejecting the higher prices. I'm going to be a little concerned. This is somewhat of a caution flag. We've come up in here into the ultimate highs on October. We tested that, and prices are pulling back. If we get a push later today, where we end up in a higher towards the higher end of the range, I think we continue higher. But if we go back and prices are rejected and go into Thursday's range, we may start staying in balance. The prices, it may not be ready to go, and we may have a pullback. But I'm just bring it to people's attention. Just watch the prices, watch the close today to see if the market is going to be pushing it higher. The NASDAQ, pretty much the same thing. But what I wanted to bring is again, we were talking, you guys were talking a little bit about AI in the previous session with Rich. When we're talking about that, there's been a lot of publicity about the mags. And this is of the NASDAQ, and we're going to talk about that. But, obviously the NASDAQ is very high-tech concentration. We've got an area, and it's pretty much the same, kind of the same thing, is we've got this area, and I'm extending it out, is overlapping value and pushing it. The same thing today. I'm going to be watching how NASDAQ works and how if it reacts to the new highs. Prices were pushed back. If we start selling off, especially if we get below the 25,590-ish area, it may be a little bit of a caution flag to me if the prices are not ready at this particular time. But one of the things I also wanted to bring to your attention is if you look at here, and here, even though the S&P 500s are on a relative basis, the S&P 500 broader averages are doing a little bit better than the tech is. We're not pushing these highs like the S&Ps were. The S&Ps in this area, we're pretty much testing them. But the NASDAQ 100 is not. So I'm showing a little bit of weakness in the high tech versus the broader averages. This is the RSP. This is the equal weight ETF for the S&P 500. And again, this validates, even though the NASDAQ 100 isn't, we've got the RSP holding above the all-time highs. So again, what I'm trying to tell is for a lot of the intraday traders is looking at what's going on within the market could be very important to you. This is probably one of the stronger ones, and it's very rare that we've seen this, that the RSP is actually outperforming the NASDAQ. But so again, a little bit of change of the dynamics of the market. So tech, even though the big everything is talk about AI, it has pulled back a little bit. And I think these last few charts are showing that the technology and the AI industry, it's just pulling back a little bit. Not to say they don't rally higher. I kind of think they are. But at this point, it's showing some of the broader or some of the other indexes or sectors in the market are starting to show strength relatively, showing more relative strength over the high tech. And here's another chart I wanted to bring that, I watch these all the time. This is the MAGs. This is the ETF for the Magnificent Seven. NVIDIA's, the Microsoft, the Apples of the world. And what this is, again, this is another one validating. I put a profile chart. If you could just look at this, we've got on a market profile area, you've got an area of high volume. And this became an area of excess supply. Pushed prices down, it ran up, pushed it down again. Now we're kind of sideways in here. How this reacts is going to have a big impact on the market, obviously. If we push higher, we're going to have another leg higher in the S&P 500. But if we pull back, we may have a little bit of a stall, as I showed you earlier with the S&P 500. We're sitting here at excess supply area. So it's going to be very critical on how these react and how this is going to have an effect on the overall market. Another one I brought is what's kind of interesting is this is the ETF of Bitcoin. A lot of traders are in Bitcoin. I use the ETF, obviously, for the options. We've had a huge distribution down. And, you know, we've got a lot of volume up in this area, but it broke. Now we're starting to see, and extend this, I want to extend this distribution out to today. So what we're finding is an area of acceptance. I haven't talked about that, but the more, when you're talking about balance, interchange with balance is acceptance, price acceptance, and it's also an area of liquidity. This is an area that traders feel comfortable with. They know that they're going to be matched one way or another. There's usually fairly balanced trade on the buy and the sell side. And we've been playing around in this area for quite a while. In fact, if you go back to this area, we've got a balance area, which I extended out. And again, if we could take that out, I had this balance area marked. This goes back to February to April of this year. This was a balance area, and it actually became an area of demand because prices went higher. You extend that out, and it's amazing how prices stop there. If you look at a regular bar chart, just look at a bar chart, there's really nothing saying that this area should stop. It's volume profile that shows. This is the area of demand that's holding prices. If this area breaks, we're probably going to go down to, on this, the 38 level, which would probably, on actual Bitcoin, bring us down to the 65,000, 66,000 area, which is still a nice move from here. But we've got that area is a very, very strong area of demand. Definitely look at buying if it gets down to that area. Where were we on Bitcoin? So there, with Bitcoin, we get a break at this area and get into that 37. I think that is going to be a very, very strong area of support for the market. The last few charts I want to talk about is energy. And again, this is the ETF for the energy, this is a group of the stocks that make this up. This is not the actual crude, but this is the energy prices. And generally speaking, surprisingly, they don't necessarily move together. But I wanted to illustrate one thing is we've been in balance pretty much in this area. And again, we've got a pretty mature area. In fact, we could probably even bring it back into here, a pretty mature bell curve. But with markets, with market profile, when you start breaking this up, you could find in this area of supply, which we've had a nice little run up, which is going to stop this. If we get, I also highlighted this high area. If prices are rejected up here and start taking this low out, we got a nice little run down to the lower areas, probably down to the 43 areas, and which doesn't sound like much on a percentage basis, from 46 to 43. But when you're looking at the options, and what you were talking about earlier, Danny, is when you look at an option, this is probably on a good short like this, probably 50% return. So that's kind of what I'm looking at with energy. We're running up into areas of supply or into excess supply that may push prices lower. And again, and the reason you take a look at the longer term, it's not really going anywhere. I mean, we've been, crude especially is kind of a balance area. It just kind of runs up and runs down, and you have to take advantage of this, either in the crude market or in the ETF, either one. The last couple ones I want to take a look at, and the one thing I just wanted to bring to everybody's attention is one of the strongest areas or one of the stronger sectors in the market has been healthcare. Surprisingly, pretty much out of no way, we had a very strong, I put in a distribution, and we had this is what I was talking about, a very mature bell curve. This is a very good example. But when you get a very strong bell curve, very mature bell curve, and you get a break, you get a real strong break. In this case, we went basically, we had what, 18% run, in what, a little over a month, 2 months. So that's just an illustration of, when you get these long bell curves and you get these runs, they could be these runs could be very strong. And the last one I wanted to bring to your attention is staples. And the reason I wanted to bring this, you kind of look at the staples because they somewhat move contradictory to the market. It's kind of a growth versus value synopsis. And what I'm looking at is we've got our area here. This is another one. It doesn't move a lot. Had a nice move here, but we've been sideways. You could pretty much put a bell curve on this sideways distribution. And again, this is a very mature area, a bell curve. And one of the things that I wanted to bring to everybody's attention is this area here that was put, this area of demand was tested. It looks like it's going to be rejected. And why this is important, if prices break above this, kind of goes into a defensive position. And this ties in with the S&P 500. And I use stuff like this a lot, growth versus value, is if we see a breakout and a price higher, it may put pressure. It may be because there's pressure on the S&P 500. So, with stuff like this, you have to look. I put pieces together. As you talked with Rich earlier, and I think he made an extremely valid point. It's constantly learning in the markets. And to me is looking at the different sectors and the different stocks, how they're reacting together is very, very critical. How the groups are reacting. And Stanley Druckenmiller pointed that out in one of his presentations. He looks at technical analysis, or he looks at charts by looking at groups, how they're moving, gives him clues and gives him ideas for investments. So that's kind of my synopsis today. Is I want to show how areas of demand, how they defend those prices when they're revisited, are great opportunities for trades. I spelled that out very much in my course, and I just, I wanted to show a little bit today on how this works, and hopefully causes a little bit of interest and someone to get some interest in and educate themselves a little bit more on market profile. I don't know if you're talking, I can't hear.
Sorry about that.
No problem.
I was just commending you on your job. You did a great job. And I'm sure a lot of market profile people out there that see this, they know that you're very good at this, Tom. And I really appreciate when you come in. And again, as I explained, I believe what you're doing as far as your swing trading is more profitable. It's less stress, right? I mean,
yeah.
banging your head around with these S&Ps all day. That's stressful.
It's just, I'm always wrong, but I'm right.
So anyways, I want to ask you, like I asked Rich, what advice would you have for traders out there that want to learn market profile? Just any kind of advice that you may have that.
it's for the younger traders, and kind of talk to myself if I was just starting this out. I think the first and foremost is exactly what you and Rich talked about. This is an education, and I kind of said that to myself is I'll always want to learn, and I didn't want to be this is the only way it works. But what has happened, and I've gone through different gyrations, and the traders, what an advantage these traders have versus what we had back in the 80s.
Oh,
How much information was out there versus today? How many videos, and we had to rely on books, and that was pretty much it.
yeah.
Even charting programs were very very difficult to find, very archaic. But I wanted to learn as much as I possibly could, but to be successful, expose yourself to as much in the beginning as you could, and listen to yourself, and try to find out learn more about your personality of a person and a trader. You'd mentioned, running your head against the wall. Yeah, I did that. We all did that. And, the intraday trader, but there's some intraday traders that are phenomenal traders.
Yeah.
It's not my personality. I'm not knocking intraday trading at all. That's not my personality. This works primarily better for me. It is less stressful. Even though, you get every once in a while, you'll get nailed with, something gap against you. That's, the overnight holding part of it. That's one of the issues. But other than that, it's find your personality and be extremely regimented, and it really, really helps get your process down and almost make it boring, where I get in your off at the same time, look at the same things, get your same process down. Take notes. That was probably the biggest help to me, because the more notes you take, I would every night with swing trading. Okay, bought here. I would make a copy of it. Bought here, sold here. Here's why, and just make what kind of setup it was, where you could go back and check and find. This really, I like this setup, but I'm not making money. And that's kind of what it is trying to make this as easy and rudimentary to yourself as you possibly can. That's when you start getting success.
Yep, I agree. Especially after you've been doing it so long, you develop patterns and things that work. And
yes, and again, going back to the notes process, you find out more about yourself than you think. And again, a lot of misnomers I had about the market, I found were not true. They just didn't work for me. Is you kind of find your personality in it, and you start finding that this setup doesn't work as much as I thought, or because every once in a while you get that breakout, and it's, oh my God, this is wonderful. This made my year. But how many times does it happen?
Yeah. Well, listen, let's tie it up. What I want to finish this by saying is that, hold on one sec. We're getting really close to our launch. We've opened up the pit room. I keep talking about it. I know that Marlon's just worked his ass off. We're retooling the MIM. We're retooling the room. It's all retooled. And I would imagine next week we will come on live, and then we will put out the link to be able to go into the room. And the way that will work for you people of like Market Profile, everybody will be in one big bucket, right? And then Tom has his own chat room where he can move into the pit room and talk, put up a chart, put on audio, the whole bit. He can even live stream. And but the cool thing about that is, if you as a trader like Tom's stuff, you will be able to hit him up. All you got to do is click on his name in the chat, and you can have a private message to him, and then Tom can talk to you about whatever type of classes he offers or any kind of questions you have. And the other part about this, we're getting really close to launching our trader funding program. I'm really excited about that. And there's a lot of very, very good stuff going on here at Mr. Top Step and Pitbull Trader, maybe more so than ever. And I think that, as I've said before, and there's a couple guys in the room that constantly say that there's stuff in the room that you just don't see in other places, and I'm proud of that. And again, I believe that sharing and the collective, that's a very important part of trading. I always say, don't trade in a closet. If you're not in a chat room, find a buddy that you can talk to during the day to converse. You could just use a simple G chat if you had to do that. But the thing is that what I want to stress here is that coming soon, we're gonna really, really open this up. And in addition to Tom being in there, we've got 4 or 5 other guys that I really, really think are top notch, and even a guy like Jim Mayo. He's constantly trading in the trader funding programs, and he's got all sorts of little charts and indicators like what Tom was talking about. I agree with Tom. I do. I don't want to clutter up my chart with a bunch of stuff. If I understand it and I know that it works, that's a different story. But anyways, we're going to leave it like that, Tom. Thank you very much for coming in. And Tom, do you want to, how could people get a hold of you? Is there an email that people maybe could email you?
Sure, absolutely. You could contact me at tom@bluetreellc.com.